Hi there, and welcome to Market Conversations. I know a lot of people are still holding on to Sundial Gore's ticker is SNDL. It is currently under $1. If you are still holding on to the stock, I would highly listen to what the CEO has to say about his company. If you guys are bullish on the stock and you're wondering if there's any future with this company, definitely hear what the CEO has to say. Before I get to that video, let's take a quick look at this chart. This stock did try to break above 95 cents. This was back in November. Ever since then, it's just been on a downtrend, even hitting a low of 0.52 today. If we go back to 2 years, this stock did have a short squeeze all the way to $3.96. Ever since then, we've just been trading under $1. It did try to break above 150. This was back in June. So this is a stock that's going to be a long-term investment. I would be very cautious if you're buying short-term call options because every single week, these one strike price has been worthless. There's no value. I would highly suggest if you are bullish and you want to buy options, buy leap calls. These are still very cheap. We have 17 cents for the 2023. I would definitely go for the 2024. That way you get more time for the stock to go up. And these are only 26 cents right now. The IV has gone down a little bit, so they're worth buying if you are bullish on Sundial. Definitely watch the interview from the CEO and let me know what your thoughts are in the comments down below.
That has a cannabis business as well as an investment business. Zachary George, the CEO of Sundial Growers, joins me now. And Zachary, you guys, like a lot of the other so-called meme stocks, for lack of a better word, you caught the attention of retail investors really earlier this year. You saw a spike in your stock. Since then, there have been other sorts of spikes here and there as you've gotten the attention of retail investors. But let's take a step back, first of all, and talk about your business, right? So you guys are in the marijuana business. You operate in Canada. What are you looking for in terms of your growth trajectory going into 2022? What do you want investors to know?
Thanks, Julie. Thanks for having me on the show. So we're effectively, we should be looked at as a 3-year-old startup in the cannabis industry. We're a Canadian domiciled corporation with a NASDAQ listing, and the retail interest in Sundial and in our shares likely would not be there without that NASDAQ listing. It's a key feature we can talk about. But our business is integrated. So we have what is the largest pure indoor cultivation facility, which is located in Olds, Alberta. And in July of this year, we just acquired what is the largest individual retail network, which is a combination of both corporate and franchise locations. And we have about 113 locations across Canada today. And then the second pillar of our strategy away from our core cannabis operations is really focused on our investment activities. And we launched a joint venture with alternative investment partners in Calgary, focused on capital deployment into the cannabis sector more broadly. And we've built a credit portfolio with significant U.S. exposure that is compliant and non-plant touching. That's over $300 million in size.
And Zach, the Canadian cannabis business has been pretty wild since the inception, right? There were a lot of hopes placed on it. There was somewhat of a rocky rollout in terms of regulation, in terms of getting stores open and getting the industry up and running initially. There's a lot of competition there. Where are we in terms of the life cycle, in terms of the stability of the industry in Canada?
I would say we're in the first or second inning of a true distress cycle. So you're absolutely right in terms of the factors you're referencing, but we saw a massive bubble emerge in the days running up to legalization. We're now 3 years into Canadian legalization, and this industry has been plagued by poor capital allocation, oversupply, both in terms of flower as well as licensing itself. And when you combine that with a certain amount of regulatory dysfunction, which is very, very idiosyncratic to the Canadian industry, you sort of get what we have today, where there are many companies that are failing to reach profitability And we see 2022 as a year that's going to be somewhat of a reckoning in the space where you're going to see attrition, some consolidation, and quite a bit of bloodshed as well.
And speaking of idiosyncrasies, we have that here south of the border as well, in terms of obviously state by state, the rules differ. There are some hopes riding on national legalization, but that has not materialized. You talked about your investments in the US, but obviously there are regulatory hurdles for cross-border commerce as well. Are there plans, though, for you guys to get involved in a more concrete fashion in the US? What would need to change from a regulatory perspective?
So without a federally legal backdrop, we are not going to be engaged in any plant touching activities in the US. We're big believers in earning the right to take risk. And we are working hard every day to build what we believe could be a dominant business in the Canadian landscape. And if we're successful with that objective, we think that a lot of doors will open up. But for the time being, we're not chasing opportunities internationally on the operations side. We're really focused on building a solid and profitable, sustainable model in Canada. But the opportunity in terms of capital deployment was really too interesting to ignore. And so we've been able to invest in secured and structured credit on a compliant basis where we're not engaged in plant touching activities, but we're able to partner with some of the highest quality operators in the US to help them fund their growth and other M&A aspirations.
So Zach, you guys report having 2.5 million individual shareholders. Now that is an incredible number. That's from back in July. Is that the latest data that you have? And why do you think that Sundial is one of the companies that caught retail investors' attention?
It's a great question, and we did disclose that in connection with our AGM. So that's the latest data we have. So I'd say it's about 2.5 million. Interestingly, there are over 1 million accounts with Robinhood specifically that hold Sundial shares. So the retail participation and really dominance in terms of our shareholder register is very real.
And how have you courted? I was just curious how have you courted them specifically as well, kind of since that happened? I mean, we looked at your stock chart, we saw that spike, we've seen the shares come down. Do you feel like you have to sort of catch the interest again? There are benefits, obviously, from a capital perspective to having the stock go up?
It's a great question, Julie. The way I would explain this is that, no, we did not seek this. We did not court this activity. I'm actually a CEO that's largely off the grid when it comes to various social media channels. So this has been a very unique experience, to say the least. But what I would say is, if you look at the life cycle and history of Sundial, we were in August 2019 IPO. The IPO process went very poorly. The business was focused internationally and had a significant cash burn rate requiring it to be restructured. And I was brought in 2020 to lead that restructuring. So I've been in the seat almost 2 years at this point. But in 2020, we had to take some aggressive measures, including orchestrating debt for equity swaps and also raised a significant amount of equity capital. And that dilution, which was required in order to save the business, actually drove more liquidity. So the way that I think about this retail interest, number one, I think it's important to note that the support that we've had from our retail investors is absolutely an essential ingredient in the survival and success of the business thus far. It's enabled us to survive some less than ideal decision making, and we've pivoted and our strategy has evolved significantly to this two-pillar strategy that I mentioned previously. But I think about it in terms of interest and access. And so if you look across the monthly reports, for example, and I use Robinhood as an example because it's a great indication and barometer for retail interest. But you can see very clearly that when you look at the top 10 securities held within Robinhood counts, from time to time, there's been a reasonably strong presence of cannabis related equities. So you have a demographic, however you want to color that, that is enamored of cannabis generally. And so there you have the interest, which is also driven by both the volatility and trading liquidity of the shares themselves. And then access is also critical as well. And when you compare us to other companies, you see a lot of U.S. MSOs, for example, that cannot access U.S. listings, and so they are listed either on the CSE or the TSX, for example. We chose in early days, prior to my arrival, to list on NASDAQ. If we hadn't done that, our path and this story would be very different, and I probably wouldn't be here today. But on the backs of that interest, we were able to raise over $1 billion Canadian, which enabled us to create a debt-free balance sheet and build out a very attractive investment portfolio, support our operations, and we're still sitting on north of $500 million in cash. So very well positioned to take advantage of distress in the sector.